Hello and welcome to financialexpress.com. I'm Shaleen Agrawal. Today we are talking about what the government can do vis-a-vis capital gains tax in the upcoming Union Budget 2023. To discuss this, we have with us Kunal Savani, partner at Cyril Amarchand Mangaldas. Kunal, thank you and welcome.
Thank you, Shaleen. Pleasure meeting.
Kunal, is India's capital gains tax regime complicated?
It is definitely, Shaleen. I believe what has happened is over the period there have been various amendments, and as you are aware that India presents budget every year. So every year there has been some request from the industry, and the government has adopted things, but I believe they've adopted in piecemeal manner. And which is where it has resulted in various different regime for the capital gains, and where it has become complex. Just to give you an example, in India, the way the capital gains are taxed, it depends on the period of holding and the nature of asset. A simple example is if you're holding an asset for more than 12 months, then it is regarded as a long-term capital gains. And if it is held for less than 12 months, then it is regarded as short term. And the capital gains tax that pay on it, that varies on this, and hence this becomes a crucial. This 12-month period which I mentioned, that's mainly for the listed equity shares. Again, there has always been in the past some flip-flop on the period of holding. Like there was a period when this went up for a short period, 24 months, and then it was brought back to 12 months. But still, pursuant to these various amendments, if I were to put in a nutshell, the way things are, like if you are holding listed shares, then your period of holding requirement is 12 months to claim any long-term capital gains benefit. If you're holding unlisted shares, then this period goes up to 24 months. Similarly, other than the equity shares, if I talk, there are these other classes of assets where, let's say you are holding any golds, certain type of bonds, immobile properties, or any movable assets. The period goes to 36 months. Now, again, thankfully for immobile property, this period was brought back to 24 months. So there has been these flip-flop situations whereby as of now we have these three different periods. One is 12 month, 24 month, 36 months. So that's what it brings complexities, and again the rate of tax keeps differing for these instruments. So it's difficult for the investors to keep a track of this and various amendments every year.
What is the simple solution?
Ideally, they should. I personally believe they should definitely have only one period of holding. And I do understand, from a government standpoint, like, they need to look at the revenue balance and everything. But, if you were to look and borrow some things from the developed countries, for example, US, they have a uniform period of 12 months. So, maybe if that is something which can be adopted, and given the globalization and, India is looking at so many, and we already have so many foreign investors, MNCs setting up shops here. So, if we can have a regime which is equivalent to that, and, a simpler one, especially for all kind of, similar set of instruments, like, when we're talking of shares, I believe we can have same holding period, at least for the listed shares, unlisted shares. And similarly, there are these different instruments, there has been so many new investment avenues like REITs and InvITs. That also I would like to say that, while these assets, they have already been converted in a unit form, in a share form. As of now, still, if you want to claim a long-term capital gain advantage for them, the period of holding is 36 months. Now, what this does is that, from an investor standpoint, or when it comes to even raising of capital and funds, it becomes an additional challenge, in addition to their normal, nature of business and that. This also became, from an investor perspective, they are generally tilted towards more listed equities rather than considering these other forms of investments.
Yeah, but then the entire purpose of introducing different holding periods for different kind of asset classes was keeping in the nature of those assets. So, for example, real estate. The idea was that kind of long-term money is required for that. Same with the REITs and InvITs. If you want to invest in those kind of assets, then invest at least for a minimum of 3 years. Then you would be considered as a proper long-term investor. Otherwise, it's a short-term trading income for you, and taxed accordingly.
I completely agree with that, and that's what I said. That my observation has been that these have been a piecemeal sort of thing. So what at least I look at it, or from the client perspective, if I look at it, at least you should try and have a broad classification of the assets. So let's say when you're dealing with financial assets, at least have one common period of holding for that kind of assets. So you can club let's say listed securities, unlisted securities, bonds, debentures, these REITs, InvITs, and those can be clubbed and have one single period of holding. There can be these investments like immovable properties, where you have a different set of period of holding. But I think it's high time that we should try and at least reduce this distinction rather than having so many different variations. At least if we may not have one single period, at least have different classes of assets similar and try to simplify it.
But the government is also mindful of tax revenues. If the capital gains holding period is shortened for asset classes, and even in different broad classifications, the government loses out on a substantial revenue from what it earns in short-term capital gains. Do you think there is a willingness on the part of the government to even look in that direction right now?
I think they might lose, but generally, at least our observation has been that no client is actually willing to shell out more taxes. So what it does is that clients then go ahead and plan their affairs in a manner that let's say, for example, in fact, we were dealing with a client where they were about to undertake a transaction for an unlisted shares. The deal and everything was pretty much ready, about to be done. But because of this very fact that if they were to close the deal at that time, they would be subject to capital gains, short-term capital gains. So, they deferred the transaction and they waited for 2-3 months. And then they went for long-term capital gains. So, while I agree with you that there might be some, leakages here and there, but I think on a global basis, and and I think that's the mantra which our government finance minister has also been saying, that they want to try and make it simple. Even if you look at more in terms of the deductions and exemptions, repeatedly they have been saying that they are looking at less deductions or less sort of exemption. So I think simplifying this, and again they can balance it out with the rate of tax which is applicable, and we can try and have something uniform.
In India, there is a difference between how foreign capital gains are taxed and how domestic foreign capital gains are taxed as well. What are your thoughts on that?
Yes, this I think you have touched one of the very right point on this, and this is especially significant when we deal with the unlisted shares. We are aware that for the listed shares, the long-term capital gain, the tax rate is 10%. And that's applicable both to a domestic investor and to a non-resident player. There used to be a ambiguity over there, and not ambiguity. There used to be a issue in terms of the non-residents. They used to avail certain treaty benefits in the past, but I think government has proactively taken steps, and I think that issue is long behind us. So in terms of the listed space, I think we are at par for domestic investors vis-a-vis the non-resident investors. But when it comes to unlisted space, and if you were to look, that is something which is picking up. We are seeing so many startups, and in fact, we are seeing so many unicorns which have been building up in India, and hence the investment that has been pouring in. There is a distinction. So from under the domestic law for a resident investor, and it could be an individual or a company, when they make investments in this unlisted space, and when it's time to reap the benefits, even if they are holding it for more than 24 months, the gains that they make out of these investments, they are taxed at 20%. And mindfully, this 20% is plus the surcharge, which we've been talking about, that there are so many different classes of surcharge. So the tax rate goes as high as 24-25% for some of the HNIs. Whereas for the same set of gains, when it becomes for a non-resident, there is a special provision that a non-resident makes this gain from any shares, and which covers unlisted shares as well. So they are still subject to tax at 10%. So there is this a basic difference in terms of the tax rates which is applicable in this space. I am mindful that this was done so as to attract the foreign investors in the unlisted space, and I think it has really done wonders also. Like in many of our transaction, we have seen this. Like this has boosted investments in startups. But I think somewhere now, it's a time that we try and bring some parity here, so that equivalent to the these non-resident investors are domestic players. In fact, so many HNIs, family offices, we keep reading every day that so many family offices, and they are in fact one of the key pioneers who are who are willing to take this initial investments, like seed funding and the initial first round of investments which have been done by them. They are still taxed at 20%. Whereas non-residents are getting this 10% advantage. So there is this, if we can try and bring that, this will incentivize more and more our domestic investors to, infuse and take more risk by investing in these kind of investments.
Do you see any changes happening in the personal taxation income tax slab rates?
I think it's quite very much required, and I think it's long overdue. If you look at the personal slab rates, starting from the basic tax rates, if I recall, the last change over there was somewhere in 2014, where the basic slab rate was increased from 2 lakhs to 2.5 lakhs. Post that, I don't think the government has touched on the basic tax structure that we have. There has been some, again, small variations in terms of what could be the deduction that is available, or a relief if your income is less than 5 lakh rupees. And also there was a different, regime which was offered, whereby an individual need, you cannot claim any sort of deductions or relief like an HRA or your ATC deductions and everything. But they have still not touched the basic tax rate that we are talking of. And on a very quick note, even at least my experience has been the new tax structure regime which was been offered. I don't think there has been many takers for that regime. Again, because India as a country, we are still way behind on the infrastructure, let's say medical, availability, facilities, and everything. So all of us are, we are still, our mindset is to continue to invest for our retirement, invest in, provident funds, insurance, and all of it. And we have already done those planning in the past, so we keep continuing that. So that regime has also not been, much fruitful, at least what I see. So a lot of taxpayers are still falling into the old regime, and I think it's high time that given the past inflations that we've been talking about, while income might have increased, but you continue to pay tax under the old slabs. Even the 5 lakh, the relief that we're talking about, the moment you cross even a few hundreds above 5 lakh rupees, you are no longer eligible to claim this relief. So the individuals are still shelling out more money, and the corollary of that is that the moment you are liable to pay tax, even it could be few hundreds or thousands, you are supposed to undertake, you are required to undertake these compliances. That is an additional burden, so I think at least it's high time that there should be a good relief for the individual taxpayers by increasing the slab rates.
You mentioned about flight of capital. In your experience, are a lot of wealthy people or wealthy families actually moving outside India to set up their residencies or investments?
Yes, that at least in our experience, and we deal with them pretty much on a regular basis.
But then, how do you determine that is because of tax and not because of other reasons, infrastructure, lifestyle, a better business opportunities, stuff like that?
Yeah. So let me explain to you. So I agree with you that tax is one of the factors, and that's the not only the factor. People have, in fact, we have seen, post COVID and the way facilities were available and everything. In fact, that was a period when we saw a lot of people, they just wanted to go ahead and get, passports of other countries, which allow them to fly, freely across. So that time, that tax was not the only factor. But whenever we have this conversation with our clients, the inquiries that they come in, at least that's what we've been hearing about. That because after the introduction of these heavy surcharge for HNIs, ultra HNIs, it is 37%, which takes your tax rate to as high as 42%. So this, and on a regular basis, we see that this becomes a first initial point of discussion. That look, this is the tax which the person is liable to pay, and and people are looking to set up, and and I think it's also more in terms of the comparative regime. If we look at our neighbor countries, like Singapore and Dubai, they are offering a very good tax regime, and if you look at it, they at the government themselves, they are also pushing and they are trying to invite these HNIs and ultra HNIs. So it's definitely a combination of things, where, people get a different lifestyle, they get good, advanced infrastructure facilities, medical facilities, having those certain kind of passports, give access to travel across the world. And this is added, with the tax advantages which this jurisdiction offer. So, tax is definitely one of the key reasons that that plays behind the mind of individual to relocate.
We'll leave it here for today, and we'll see what is actually offered in the budget, and then probably pick it up from there. For today, thank you so much for joining us. It was really a lovely talking to you.
Same here. And thank you for the time.